I made around 12,000 euros in profits from my investment portfolio in the last 6 months. Just in the last 6 months. If you take a short look at my portfolio, you can see that I've been investing only in stable, well-established companies and taking minimal risk. But still, I managed to make a considerable gain. Now, how exactly I did that? I will come to it in the later parts of the video. But many of you have asked me how and where I invest my money. So in this video, I'll be sharing my portfolio covering my stock market investments in Germany. Before we get started, I need to share 2 disclaimers. First, this is not financial advice. I've read a few books about investing and have some hands-on experience, but I'm nowhere near being an expert. I'll be disclosing the details of the companies I've been investing in and sharing my opinions. However, don't blindly take them as advice. Always do your own research and consider your financial situation before investing. It's called personal finance for a reason. And second, the purpose of this video is not to show off my investments or how much I have saved. Honestly, my portfolio isn't as remarkable as others in this niche. Money is such an important factor for our well-being and happiness, and I believe it's important to talk about money more openly. I just want to show that you can start with a little, invest regularly, and let the power of compounding work for you. Having said that, let's get started. If you are new here, my name is Srijit, and on this channel, we talk all about wealth and happiness, and sometimes about my investments. A major share of my investments are in India because I think the Indian market has more growth potential in the coming decade. I will cover my Indian investments in detail in a separate video. So do subscribe to the channel and enable notifications. However, it could also be that I might need money here in Germany sometime in the near future. For example, to purchase a house. Of course, I can bring over my investments from India to Germany, but I just wanted to keep a share here as well. And if you have been watching my videos, you would know that keeping money in a bank account in Germany is a foolish thing to do because of the very low interest rates. So around the time of COVID, I also started investing in Germany with an online broker, Scalable Capital. Since I don't actively trade and my investments are mostly monthly saving plans, I choose the basic free plan from them. They do offer paid plans with benefits like unlimited free trades and a 4% interest rate in the first 4 months. But the basic plan perfectly works for me and my needs. And additionally, the money is held in Bader Bank and is insured up to 100,000 euros by European regulations. Even though it's more about where you invest than how you invest, I've been using Scalable Capital for the past 4 years and have no complaints about them. If you want to register with them, I'll put a link in the description below. As of July 2024, my portfolio is up by 30% with unrealized gains of around 20,000 euros. And in the last month alone, the portfolio has increased by around 3,500 euros. But I want to zoom out a little bit and show you that it hasn't always been like this. As you can see, I started this portfolio with 1,250 euros in 2021. And within the first couple of months, the portfolio value started to go down. Had I not kept on investing or sold off my investments at that time, I wouldn't have made the profits that I have now. You can see about a 24-month period where the portfolio experienced some sideways and negative movement thanks to the tech wreck of 21-22, which saw many of the tech-based holdings plummet. But from mid-23 onwards, the portfolio has generally headed in an upward direction. Now, that's since 2021, so just over 3 years. When we do the math, it's like a return of 30% per year, which is extraordinary. So let's have a further look into the allocations and see which assets gave me such good returns. There are mainly 2 assets that I invest in: individual stocks and index funds. Although my investments are spread across different sectors such as energy, healthcare, consumer goods, financial services and others, still you can see there is a strong focus on tech stocks. There is a reason for that. I am an engineer and also a tech enthusiast. So this is one industry that I am most exposed to and most aware of. And no investment in tech is complete without the 2 giants in the industry, Apple and Microsoft. I have around 12% of my portfolio assigned to Apple, making it the largest individual stock investment in my portfolio. I am a huge Apple advocate and I believe in the company and its ability to innovate and remain a dominant player. The stock has performed considerably well, giving me an absolute return of 54%. Microsoft is my second largest holding, providing a return of 57%, which is again quite significant. And if we look at the future, there are many developments happening in cloud computing and AI within this company. And I believe there is a great potential for Microsoft there. So I personally don't believe we can really go wrong with these two companies. But again, it's my personal opinion. So I have set up savings plans to invest €100 monthly in both of them. I also have a good share of investment in Alphabet, which is the parent company of Google. It has also performed relatively well with a 50% return. A couple of other significant positions that are performing well for me are Amazon and JP Morgan. Both are valued at €5,000 each with a return of just over 45%. They give me some exposure to other sectors such as consumer goods and finance. And when it comes to consumer stocks, I prefer stable companies that aren't heavily affected by market conditions. Companies like Coca-Cola, which is also a favorite of Warren Buffett, as well as Procter & Gamble and 3M. Even though these companies aren't growing as fast as their tech and finance counterparts, they have another major benefit. They provide me with passive income in the form of dividends. Now, dividends are a means for companies to reward the stock owners for the ownership. And for us investors, they are a way to get regular income without doing anything to the investment itself. You just buy the stock, sit back and collect the cash. Now, different companies have different payment schedules. Some pay monthly, some quarterly and some annually. Last year, I received dividends of around €100 from Coca-Cola, 80 from 3M and 60 from P&G. Even though it's not much, it's still free money that I can reinvest into the portfolio to make use of the compounding effect. I also hold shares in other dividend stocks such as Johnson & Johnson and McDonald's, and have been receiving almost €100 yearly from them. Then sadly, there is Tesla, which has fallen from its craze. I hold 21 shares of Tesla valued at around €5,000. The optimism about the company is nowhere near what it used to be. And while I'm still hopeful about Tesla's long-term prospects, the short term could be a roller coaster ride. I also have small investments in companies such as Visa, Disney, Uber, Airbnb, Berkshire Hathaway, and Nvidia. Now, Nvidia is one investment that I regret not buying earlier. Most of my investments have made profits, except for a few, and I can't talk about losses without mentioning Coinbase. Even though I just bought one share during the IPO, it has been one of the worst performing stocks in my portfolio, falling to €30 from a peak of €280 at one time. But it did teach me a valuable lesson. Never give in to the hype and always understand the company well before investing. I also lost some money with other stocks, though not much. Every loss is a new learning. And that brings me to the second part of my investment portfolio, index funds. A recent study by McKinsey shows that the average lifespan of a company in the S&P 500 was 61 years in 1958, but today it's less than 18 years. Think about it. If you're picking individual companies to invest in right now, chances are that 3 out of 4 of them will not be doing as well 20 years from now. When it comes to individual stocks, I've actually lost money, whereas I've never lost money investing in index funds. Index funds just track the market, and the market always go up over time. So right now, I'm focusing more on index funds and I've increased the investments that I make in them. The index fund I mostly invest in, and my favorite is the S&P 500. This is the only portion in my portfolio that is bigger than my Apple investment. The S&P 500 is an index fund made up of the 500 biggest companies in the US. This means that if you invest, let's say $1,000 into the S&P 500, then $40 will go to Apple, $30 to Google, $20 to Microsoft, $20 to Amazon, and so on. It's almost as if you are putting a small amount of money into each of these big companies. And if you invest in all of the top 500 companies in the US, chances are your investment gains will go up as the market goes up. As you can see, my unrealized gains in the S&P 500 are at 33%. Or around €2,750. I'm consistently investing €200 every single month with the help of a savings plan. You can also see that it's an accumulating ETF. That means it does not pay any dividends. Instead, they are reinvested back into the ETF. I also have some holdings with Vanguard FTSE All World Index Fund and Invesco EQ Nasdaq 100 ETF. Another strong point about ETFs is that they have very low expense ratios in the range of 0.1%, which makes them a good investment from a cost perspective. Other than stocks and ETFs, I keep some reserve cash in my broker account for quick investments. This way, if the market drops at 30 to 50%, I can quickly invest without waiting for the money to get transferred from my savings account to Scalable Capital. So that's my Scalable Capital portfolio. I'm planning to rebalance it sometime soon, selling off some investment considering my overall capital gains and tax payments. I will also stop investing in Scalable Capital when the portfolio touches the €100,000 mark, as investor protection stops beyond that value. Although I will continue investing monthly using another broker such as Trade Republic, or move a major share of my investments to the Indian market where I have made more returns. Finally, if there is one thing you can take away from this video, it's not about the companies that I picked or the figures you see on the screen. I attribute most of those results to one very simple thing: taking consistent action every single month by investing in my portfolio without fail. Nothing else. Let me know what you think about my portfolio in the comments. I'm also curious to know about your picks. If you're looking for a great free investing broker in Germany, you can sign up with Scalable Capital using the link in the description below. And you can watch this video to get started with them. I'm also building a community outside of YouTube to discuss German finance topics, where people like you and me can come together to collectively share their experiences. I will also be uploading exclusive videos of how I make investment decisions and how I do the rebalancing every year. So if you are interested in being part of this community, then click the link in the description below to join the waitlist. For now, I want to limit it to a few people to keep it manageable, and it will be first come, first serve. So do sign up earlier if you want to be a part of it. I'll send you updates as they come. I hope you got some value from this video. Until I see you with another one, have a wonderful rest of the day and adios.